Good day, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 Index. Some critical price action here. The market sliced through the top end cloud chart support level there, 4612. It's now digging into the cloud, looking for support. Key support levels to watch out for is 4536. The bottom in the cloud here at 54511. Now, it's absolutely critical for the market to stay above this bottom end cloud chart support level, so then the rally is still okay. But there is a downside risk that the S&P might end up testing these key levels so far. There was a MACD sell signal up above the top in the cloud here. We've just had a cloud chart sell signal as well, so there might be some more downside to come as the S&P could be on its way to test this bottom end cloud chart support level, so watch out for those levels. Now these levels coincide well with the November lows there, where they started to rebound there as well, and then these October levels there as well, so watch out for these levels. That's the bottom end cloud chart support zones where we can see a potential rebound. Now the picture is slightly negative or bearish on the 4 hour. We've got a price actions below the cloud, so that's a bearish state of situation here. There was a fantastic sell signal at the top end of the cloud here on a MACD basis, and also then a cloud chart sell signal. Now what's interesting to note that these levels here, these cloud chart support levels, are potential rebound zones, so watch out for potential rebound to come back in at 4536 and 4511 as well as 4523. So that's the cluster of potential rebound support to come in on the 4 hour chart. But the outlook is bearish, so we are swing trading potential rebounds from these support levels, or you could short sell these down to those levels, but watch out there. We are in bearish territory because price action is below the cloud, and watch out for a potential rebound at these cloud chart support levels. Now turning to the weekly chart, let's go and look at there. Now we can see the key levels to watch out for is this standard line of the cloud is a potential support zone, but we've lost support at the front end of the cloud here. You can see this front cloud support levels, so that's a bearish signal, as negative, so this could retest these levels and then dig into these old highs here. Can also come back in as a key support level, but very major divergence between the MACD for a while now and the actual price action. Now the biggest picture risk in this market is we look at the monthly. You can see how extended the market is from the top end of the cloud, so be aware that this conspicuous consumption bubble is starting to show some deflation, or going to be deflating, or there's significant downside risk in this market if you just look at the distance between the current cloud, the standard line and the turning line, and then the price action up here at the top end of the cloud. So if you look at the quarterly chart compared to the 99 run up, the distance between the clouds and the actual price action is quite extended. So the market's very extended on a quarterly basis as well as a monthly basis. The easy money's been made. There's downside risk to the front end of the cloud here if support fails at the turning line of the cloud there, and then the other levels to watch out for is the front end of the cloud here. So these are the downside risk targets in an overall stronger market correction, or a bear market, so to speak. But we are very extended from the top end of the cloud. The market's also going through a seasonal weak period. January and February seasonal weak periods. But key levels to watch out for on the S&P is the bottom end cloud chart levels here, and the 4 hour chart, looking for potential rebounds at this cluster of support. And if we drill into the 3 hour and the hourly one, you can also see where those key levels are. This low here of November might also prove to be a nice swing trade back up to the bottom end of the cloud. You're looking at the hourly chart here, also bearish there. We just see where the levels are on the hourly. You can see this cluster of support is winking at the current price action. The key sell signals overall on the hourly was this cloud cross here. That was a major sell signal in the market there. Sell to the downside. The 4 hour one as well, when it sliced through the bottom in the cloud, failed to find support there. That's also another sell signal, in addition to the MACD that was up here when it became very extended from the top end of the cloud. So those are all swing trades. And then looking at the daily one, it's looking a little bit weak here with this downside risk to the bottom end, the front end of the cloud. So it'll be interesting to see if we're going to get a rebound in and around these cluster of support levels. But long as the S&P stays above the bottom end of the cloud, the rally's still okay for this year. But do remember, we are trading a very extended market on a quarterly and monthly basis. Until next time, happy cloud chart trading. Bye for now.